A Trump crypto account rumor could trigger a liquidity grab to $65,740 before the rug pull. Bitcoin is at $64,273, and the whole market is staring at the resistance at $64,245 like it's the only number that matters. But here's what nobody is telling you. The weekly trend is a strong sell. Stochastics are baked at 96. MACD is still negative 1,098. Every time we've seen this setup in the last 3 months, it's been a liquidity trap, not a breakout. There is one danger zone and one hidden opportunity right now, and I'll show you both. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today. My session bias is clear. Short-term momentum is trying to push higher. 1 hour and 4 hour a strong buy, but higher timeframe gravity is pulling this into a distribution zone. I'm fading this breakout until proven otherwise. The trend on the weekly and monthly is strong sell. Price is trading below the 50-week moving average, below the 100-day at 69,609, and that is not a bull market structure. My single invalidation level that flips everything is $65,740. Write this number down. If Bitcoin closes a 4-hour candle above 65,740, the strong sell weekly structure breaks, and we target the 100-day MA at 69,609. Until then, this is a sell the rip environment. And here's the micro insight on positioning. The herd is long. They chased this pump on a Trump headline. Something could happen with Bitcoin accounts. Funding rates ticked positive, open interest spiked, and retail is suddenly bullish. That means liquidity is sitting right above 64,245, waiting to be hunted. Smart money doesn't chase. They use that liquidity to offload. Let's zoom out to the weekly chart. Strong sell. Price is below the MA20 at 62,462, below the MA50 at 65,636, and below the MA200 at 76,348. This is a bearish alignment. Every rally in the last 6 weeks has failed at a lower high. That sequence is intact until we reclaim 65,740. The weekly RSI never confirmed last week's bounce. It's still below 50. That's a hidden weakness. Drop to the daily. Neutral, but compression is building. The daily pivot point sits at 63,361. That's the level that held price yesterday, and it's the floor for today's session. The 20-day moving average at 62,462 is curling slightly up, but the 50-day at 65,636 is flatlining, no trend strength. ADX is 24. That's low. It tells you this is a choppy, range-bound environment, not a trending one. Stochastics at 96, overbought. MACD line negative 1,098, still deeply in bearish territory. Williams %R at negative 0.64, basically maxed out. When short, term oscillators scream overbought and medium-term momentum is still bearish. That is the exact divergence that precedes a snapback, now the 4-hour. Strong buy signal has pushed price above the 4-hour MA20, but the 50 MA on that timeframe is at 65,636, which is still $1,400 above us. The 4-hour RSI is at 62. Still room to run, but not much. The real warning comes from the CCI on the 1 hour. It's 2,054. Anything above 200 is extended. Above 2,000 is a coiled spring waiting to release. We've seen this exact CCI reading before, February 3rd, March 18th. Both led to intraday drops of at least 3% within 6 hours. Here's what most traders miss. Look at the hourly chart against the daily. Price is making higher highs on the 60-minute, but the daily RSI is flat at 53. That is a classic momentum divergence. The short-term energy is not being confirmed by the larger structure. That's a trapdoor, not a launching pad. Key support levels to watch, 62,477, that's the S1 pivot, and it aligns almost perfectly with the daily MA20. Below that, 61,866 and 61,255. Those are your downside magnets. Resistance, 64,245 is today's lid, then 64,856, and the big liquidity pull at 65,740. The market is pricing a test of 64,856 if the Trump rumor gets another headline, but unless the weekly structure breaks, that's a fade. The 24-hour news cycle is pure speculation. Trump said something could happen regarding Bitcoin in government accounts. That's it. No policy, no executive order, no timeline. This is a headline-driven pop, the kind that attracts fast money and then evaporates. Meanwhile, the real institutional story is Bitmine reporting 5.74 million ETH holdings and total assets of $11.1 billion. That's a structural accumulation signal, but it's a multi-month tailwind, not an intraday catalyst. Cross-asset linkage screams caution. S&P 500 futures are flat. The DXY is holding steady. Bitcoin is pumping on its own isolated narrative, decoupling from risk appetite. That decoupling is dangerous. It means liquidity is thin, and the move is driven by crypto-native speculation, not broad market conviction. When Bitcoin rallies alone, the reversal is always more violent. Funding rates are positive but not yet extreme, yet the open interest chart shows a steep climb in the last 6 hours. That's a long squeeze setup. If price fails to hold 63,361, those late longs become fuel for the downside. MY 1 to 2 week directional lean. Fade this pump, look for a retest of the 62,000 zone, possibly down to 61,255 if risk appetite deteriorates. The exact invalidation is a weekly close above 65,740. If that prints, the entire bearish thesis is off. Do you think Bitcoin breaks 65,000 this week? Comment yes or no right now. I'm tracking consensus. Most people skip this section. That's exactly where the money is made. Keep watching. I'm laying out 3 setups with exact entries, stops, and targets. We're going to use the volatility, not fear it. Strategy 1. The opening scalp. This is a fast snipe on the 5-minute chart. Price has already kissed 64,245 and stalled. Wait for a confirmed rejection. The trigger. A 5-minute bearish engulfing candle that closes below 64,200. That's your entry. Sell at 64,195 if you can, but 64,200 works. Stop loss goes at 64,280, just above the high of that engulfing wick. That's $80 risk. Take profit 1 is 63,900, just above the next intraday liquidity pool. That's a $300 move, giving you a risk-reward of 1 to 3.75. If momentum extends, TP2 at 63,600. Void this scalp immediately if the 5-minute candle closes back above 64,300. That means buyers are still in control. The opening scalp. Entry, 64,200, 5M bearish engulfing. Stop loss, 64,280. Take profit 1. 63,900. Take profit 2. 63,600. Risk, reward. 1 minute and 3.75 seconds. Invalidation. Void if 5M candle closes above 64,300. Strategy 2. The liquidity grab. This is my favorite setup when sentiment is this one-sided. The 1-hour chart shows a swing high around 64,350. If price pushes above that, stops get triggered, and the trap is set. The trade. Wait for the fake breakout. Price pierces 64,350, wicks above it, and then reverses sharply. The entry trigger is a 15-minute close back below 64,300. Sell at 64,280. Stop loss goes at 64,400, just beyond the wick. That's 120 risk. The target is the nearest intraday liquidity pool at 63,900, the same level as the first scalp, because that's where buy orders are clustered. That's a $380 gain, risk reward 1 to 3.2. This trade requires fast execution, so set alerts. Invalidation. If price stays above 64,350 for more than 30 minutes, the fake out failed, exit. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. The liquidity grab. Entry, 64,280, 15M close below 64,300 after fake out. Stop loss, 64,400. Take profit 1. 63,900. Risk, reward. 1 minute and 3.2 seconds. Invalidation. Void if price holds above 64,350 for 30 plus minutes. Strategy 3. The session swing. Now the swing trade for those who want to ride the higher time frame bias. This one aligns with the weekly strong sell and the daily overbought signal. The trigger. A 4-hour candle close below the daily pivot at 63,361. That level is the session floor. A close below confirms momentum shift. Entry on the retest. 63,300. Stop loss above the daily. Resistance cluster at 64,200. That's $900 risk. Take profit 1 is 61,866. The S2 support, for a $1,434 move. Risk reward 1 to 1.6. TP2 is 61,255. The S3, for a $2,045 gain. Risk reward 1 to 2.27. Once price reaches halfway to TP1, around 62,500, move your stop to break even. The invalidation that shifts the medium-term outlook is a daily close above 64,500. If that happens, the swing short is off. The session swing. Entry. 63,300. 4H close below 63,361 and retest. Stop loss. 64,200. Take profit 1. 61,866. Take profit 2. 61,255. Risk, reward. 1 minute and 1.67 seconds, 1 minute and 2.27 seconds. Invalidation. Void if daily close above 64,500. Trailing stop to break even at 62,500. Never risk more than 1 to 2% per trade. Scalps demand even tighter risk, 0.5% maximum. No positions through high-impact news unless you're already in profit and have a guaranteed stop. Stops are non-negotiable. This is how you survive to trade the next big move. So here's the single most critical level for the next session. 63,361. That daily pivot. If it breaks with volume, the whole structure flips bearish, and we accelerate towards 61,255. Tomorrow, the US session brings the real test. We have Fed speak and potential Trump follow-up headlines. If the weekly sellers defend 64,245 and push below the pivot, we could see a cascade. I'll have the updated blueprint 24 hours from now, before the open. If you want the full breakdown on the gold divergence from Bitcoin, because that decoupling is a massive warning, that video is live now. Tap the end screen. Then hit the bell so tomorrow's alert lands before the first candle. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter.